the What Bitcoin Did podcast.
Hi there, how are you all? Welcome to the What Bitcoin Did podcast, brought to you by Kraken, the best place to buy, sell and trade digital currencies. I'm your host Peter McCormack, and today I've got the next installment for Lightning Month. I've got a really interesting interview with Peter van Valkenburgh from Coin Center, where we discuss how regulations may apply to the Lightning Network. But before that, I've got a message from my super and amazing sponsors. So first up, BlockFi. Did you check out my new interview with Zach? The one I've talked about for a while. So their interest accounts, there were a lot of questions about that. So I uploaded to SoundCloud an interview I did with Zach where we discuss all the things and all the questions people had about topics like rehypothecation and insurance. So if you are interested in the interest accounts and you want to check that out, head over to my SoundCloud page, which is soundcloud.com/what-bitcoin-did. And if you checked out the product yet, are you interested in it? I am. I'm going to sign up this week. I'm going to put my Bitcoin where my mouth is. I'm going to sign up to their interest account. And following that, I'm going to do some feedback. I'll tell you about my experience. I'll tell you how I found the product and over the months as I receive interest, how it works. And it's going to be my Bitcoin, nothing else. So yeah, that'll be interesting. So if you are interested in checking out these interest accounts, then I suggest you head over to their website, which is blockfi.com, which is at blockfi.com. That's blockfi.com, blockfi.com. And also my other amazing sponsor, which is Kraken. I've got such a great relationship with these guys. I really do love working with them. And like BlockFi, it's a really strong relationship. It's not one where they just give me money and I do the ads. I speak to them every week. I talk about all the work I'm doing. I talk about the work they're doing because I really want to understand them. I want them to understand me. I want to make sure that I can do a really good job promoting their exchange because I do, without doubt, believe they are the best exchange in the world with everything they're doing for the industry. So, I've told you about their approach to security. I've told you about the new Kraken security labs for improving security across the industry. I think we can all agree that's really very cool. I told you about my experience using the product, how I bought and sold Bitcoin on the exchange, and how I used it to transfer pounds back to my bank account and how easy it was. I've talked to you about the upcoming work that's been done on design and UX. And I've told you about their plans to grow their business into the most comprehensive and best exchange in the world. Well, I already think it's the best exchange in the world. So I am more than happy to be working with Kraken. I think they are a very good benchmark for how crypto companies should operate. But what about you? Are you using Kraken? If not, let me know why. If you are, I want to hear from you. I love your feedback. Every time somebody writes to me, I do read it and I usually reply. So I definitely want to hear from you. And if you do want to support Kraken with me, you can do so by signing up at kraken.com, which is kraken.com. Okay, so on to my interview with Peter. And following an article I read on the Coin Center blog by Niraj, where he was talking about money transmission licenses relating to node operators, I knew that I'd have to have Coin Center as part of this, and I knew that I'd have to get Peter on. So when I bumped into him at the Blockchain Expo at MIT, I asked him and he said yes, which was great. So yeah, we got on the phone and asked him a bunch of questions, and he's explained to me about the implications of regulations on node operators and custodial wallets. And there's a bunch of things that I wouldn't have known about. So I think it's super interesting because he does a really good job of breaking this all down and explaining it in a way that, you know, I can understand, so hopefully you can understand. And he explains why Coin Center are pushing for node operators to not require money transmission license. So yeah, if you want to find out more, there's a bunch of stuff in the show notes. And, you know, if you've got any questions, you can always feed back to me. And if you enjoy the show, you can definitely do stuff to help support it. I've got a whole section on my website. If you just head over to whatbitcoindid.com, click on the support section, even if you just go on iTunes and leave me a review, that's super helpful. And I also want to say a massive thank you to my top tier patron, Rise Wallet, a new way into Bitcoin. There are no signups. You just scan the card and you are holding Bitcoin. So head over to risewallet.com and check them out. Okay, so I hope you enjoy the interview. If you've got any questions, feel free to feed back to me. My email address is hello@whatbitcoindid.com. So how are you?
I'm good. It's been a good few months, really. I don't know if you saw, we published another report. So now we've got 3 in the last 3 months. The most recent one is James Faust, our senior research fellow, who's formerly at CFPB. We stuck him because he's the new guy with writing a whole long thing about the IRS and tax law. And so we just published that.
I haven't read that yet, so I will definitely check that out. I was talking to somebody about you recently. I was with Angela Walsh.
Oh, good. Yeah. I remember the hullabaloo that happened on Twitter after you released that podcast, which I thought was kind of ridiculous. But
Yeah.
I think you handle it well.
To be honest, there's a hullabaloo about most of the things I seem to do these days.
Exactly. And I think that's probably a good thing. If they're not shooting at you, you're not doing anything good, right?
Well, maybe. I don't know. I think sometimes I'm my own worst enemy. Today I'm trying to get Calvin Ayre and Craig Wright to sue me, so maybe I'm not. Yeah, it's not always the best ideas, but no, we had a good long conversation, and I said to her, actually, I think if she'd have been the other side of the debate for you at the Senate testimony hearing, it might have been a more productive and healthier debate than, say, with Nuriel.
I've said the same thing to other people, so absolutely agree.
Well, so I'm going to put it to you and her that at some point we're going to redo that hearing, except it's going to be with me and you two together at some point. I'm hoping anyway.
I'd love to do that. There is a slim chance, or maybe it's a better than slim chance now, that we'll be on a panel together at Consensus talking about this stuff. But what people are going to be on which panels, so I have no idea what's going to happen.
It's good to speak to you again. It's good to get you back on the podcast. The last episode we did was really well received. And as I mentioned to you in Boston, I'm doing a series now on Lightning, and I'm covering various topics from the tech to retail. And obviously, it would be good to talk to you a little bit about the law. I don't know, this might not even be a particularly long episode, but it'd be good to talk to you about the legal side, because I read an article that Niraj wrote that went up on your blog discussing money transmission licensing and how it relates to Lightning. So before we start, is this the only issue related to Lightning that you guys are having to cover, or is there anything else?
So this is the big one, but it's actually two issues. And a lot of people, I think, miss that point. So money transmission licensing is something that the states do, and it's about consumer protection. It's about, like, we don't want a company like Mt. Gox running away with a bunch of New Yorkers' Bitcoins. So we want to license companies that do exchange. But then there's also running a money services business, of which a money transmitter is a certain type, creates federal rather than state obligations for the proprietor with respect to anti-money laundering laws, which are predominantly federal laws rather than state laws. And those obligations are, you don't need to get a license necessarily. You just need to register with FinCEN, but you also need to have a risk-calibrated anti-money laundering program and know all your customers and file suspicious activity reports. So there's two questions that a lot of people just put together under the bracket of so-called money transmission regulation. Do you need licenses at the state level for consumer protection purposes? And do you need to register with FinCEN and develop a risk-calibrated anti-money laundering program? And those are two very different questions. And with the Lightning Network, actually, they're more different than they normally are, which is kind of interesting. So
for a comparison, could you explain who currently has to have these licenses right now within the crypto space and for what purposes? I'm guessing exchanges are one.
Yeah, so the most obvious case here is centralized exchanges. So a company like Coinbase or Circle that holds a bunch of Bitcoin for the people that are trading on the platform. They may also just run a hosted wallet business in general. Maybe the users aren't doing exchange. They're just holding their Bitcoins there and transacting once in a while, like buying stuff with their Bitcoin or whatever, if anybody actually does that, which I hope they do. And Lightning might help. And so that business where you're basically like a Bitcoin bank, that's the kind of business that states, especially New York with its BIT license, but eventually, Washington State by amending its money transmission license, and a bunch of other states decided, okay, that looks sufficiently similar to PayPal, essentially, or Western Union or MoneyGram for that matter, that it makes sense to require them to get a license. And so generally speaking, if you're operating in the US with US customers, you're going to have licenses in the 53 different states and territories that regulate this stuff, unless the state has said, we don't think Bitcoin is money or monetary value, therefore Bitcoin companies don't need money transmission licenses. But an exchange that handled money, as in dollars, would still need those licenses. And so most of these big centralized exchanges have as many licenses as they've been able to get. The ones that they don't get are usually in states that have said, like, we're not sure, so come back to us later, which is kind of alarming. But But that's the way policy kind of emerges in the space with highly disruptive technologies.
So do you have to have all 53? And if so, do you have to apply for them all separately and you can't operate any business until all 53 have been secured?
Yes. And if that sounds like an ungodly hell of compliance people and regulators, it is. So like there have been lots of attempts to get like reciprocity provisions put into the state statutes that require licensing. And I'm pretty sure Alaska is the only state that honors other states' licenses. So if you get one in Iowa, you don't need one in Alaska, but you need one everywhere else. and unless you're assuming you don't have customers in a certain state, like if you have no customers in, I don't know, Florida, then I guess you don't need a license there. But if you're an internet business, you're going to have customers in every state.
And are there nuances between the different licenses?
Yeah, every license is different. Some of them have really robust consumer protections, like you got to post a $10 million bond or something like that. And some of them have almost no consumer protections, like Alabama, where you only have to post a $5,000 bond. Like PayPal, for example, or a company like it probably is licensed in Alabama and has only posted like a bond in the range of a few thousand dollars, despite the amount of money they handle for people in Alabama. So there's huge differences in the amount of protections and the cost of getting the license. And every application tends to be different too. There is this effort underway to sort of create a unified application, kind of like the unified college application for applying to colleges, that the CSBS is proposing. It's called the NMLS. And there's some success with that. I think there's now like 14 or 15. I could be wrong. Maybe it's now more like 20 states where you can sort of do a unified application, but your compliance obligations for each state will still be unique. So this is a huge lift from a compliance standpoint.
Right. And are there any examples of businesses that require money transmission licenses that I wouldn't have expected? So an exchange is kind of obvious, but maybe any forms of custodial wallet?
So yeah, a custodial wallet, I don't know too many businesses that only do hosted wallets and don't do, exchange, because why would you not? But if you're holding people's Bitcoins, as a policy matter, it's hard to argue that you're not creating the exact same kinds of custodial risks that PayPal or Western Union create. Like you could lose the money. And so it makes sense for states to require to get a license. Now, every state has a different definition of what constitutes money transmission. So as a legal matter, you may kind of fit into that or fall out of that, depending on how strange your business is. But as a policy matter, it's CoinCenter's position, we're not big fans of licensing regimes because they put permission on innovation. But if we're going to have an even playing field with the rest of, the financial world and not ask for special treatment, just equal treatment, then it makes sense that if PayPal or the Western Union need to get a license because they hold people's dollars, if you hold people's Bitcoins or Ether or whatever, you also should get a license. And we've worked with the Uniform Law Commission to try and tighten up these legal definitions so that we don't accidentally sweep in non-custodial entities like miners and full node operators into that licensing requirement. Because really, the definition of who is a money transmitter should focus on whether you can lose people's Bitcoins or Ethereum or dollars. But the definitions, as I say, vary. Sometimes they're as broad as money transmission is facilitating the transmission of money or monetary value, which is like an armored car does that. AT&T does that when they provide internet services that allow people to transmit money. It can't be everything. So the Uniform Law Commission created this model law, and we had some input on the language for the definition of who needs a license under this model law. And we said it should be limited to people who can unilaterally execute or indefinitely prevent a transaction using a customer's Bitcoin. And that makes sense because that would cover the Coinbases of the world, but it would not cover a company that set up a one of three multi-sig and only held one key, like BitGo used to do, and I think still does for its customer wallets. And it wouldn't cover, of course, a miner or full node technically a miner who has 51% power on the network could prevent transactions for as long as they have 51%, but that's an extraordinary circumstance. And maybe we'd even want them regulated if they were attacking the network in that way. I don't know. One thing I should be clear about, that model law that the ULC promulgated represents what we think is the right policy choice for who needs a license. and a correction of the broad legal language to enact that policy. But it's just a model law that then would need to be adopted by all of the states in order to actually be the standard. Right now, the standard is still this complicated standard that every state has a different definition.
But what about international businesses who have US customers? Are they excluded from these requirements?
No, not at all. So the US has for a while been sort of the world's policeman with respect to the flow of money in the financial system. And so if you deal with any US customers, even one, or if you purposefully avail yourself of any of the US's infrastructure, if you will, financial institutions and things like that, you better be compliant with these same rules. Because, I mean, you could say, well, I'm in, I don't know, Luxembourg, come and get me. And they will potentially if they want to. Like, there's a long track record of success for the US getting extraterritorial enforcement of their financial regulatory laws and getting extradition for people who are violating those laws so that they can be tried here in the US. Now, maybe if you were in a really friendly jurisdiction, you could, I don't know, hide in an embassy for a while and not get extradited. But we happen to be recording this on the day that somewhat unfortunately, Julian Assange has been pulled out of the embassy and is probably going to end up tried here in America for things that look a lot like free speech. Anyway, that's a sidebar conversation. But yeah, being overseas isn't a safe harbor for you.
Is that why companies like BitMEX essentially block you if you're a US customer?
So yes, that's probably why BitMEX is blocking people. I was about to say the New York Department of Financial Services, which is the money transmitter regulator in the state of New York, just issued a rejection of Bitrex's application to get a bit license in New York, which means they're going to have to pull out of New York and somehow get the money back to their New York customers because the regulator's saying you just can't do this business in New York, which is pretty aggressive, but they may have had good calls. I don't know.
Okay, so when we look at the Lightning Network, then I guess the things that you are looking at there are nodes and custodial wallets. And there has been some suggestion that some of the more kind of mega hub nodes, which are offering channels and capacity across the network, may have had to consider having a money transmission license, but you don't believe they do.
So again, to be really clear, I'm nobody's lawyer who's listening to this podcast.
Of course, yeah.
And from a public policy perspective, so like what should the law be? We don't think the Lightning Network, anybody operating a node of a Lightning Network should be required to get a license. And the reason for that is the question of custodial risk. The bottom line is because of the way the time lock and the multi-sig script is calibrated for what people are doing on the Bitcoin Lightning Network, they really, generally speaking, under normal operation of the system, have no ability to run away with large amounts of money from the users of the Lightning Network. The funds are locked up in these channels, and they're playing a functionary role, kind of like a minority party in a multi-sig agreement, and that's part of what they're doing, making those transactions go through. They're not actually taking the money from one person, holding it at their full discretion, which means they could lose it and send it to somebody else or steal it for themselves. They're not holding it and taking it and giving it to someone else. And so because of that, they don't create the kind of trusted relationship and risk for users that a company like Coinbase or Mt. Gox create, of course, because we're trusting them 100% to not lose the funds. Now, a few people have talked about what if the channel you've established is highly unbalanced and a transaction has been made that is below the dust limit on the lower Bitcoin network itself. And then the channel dissolves because the party you're working with walks away from it. Could you lose those funds as that channel participant? Could you lose somebody else's funds if a transaction was below the dust limit? And maybe, because it'd be impossible to close the channel, because you couldn't write a transaction to the Bitcoin network that would be sufficiently large that it would get processed by miners. But there's a lot of contingent things here. The dust limit in Bitcoin is just a policy rule that miners choose. So it's not part of the core protocol. So a miner might have a lower dust limit, which means you just have to wait longer until you find a miner willing to process that transaction. So are the funds really lost, or have you just made a transaction so small that the Bitcoin network can't process it as a whole? So that's a nuance. Another nuance here is these are de minimis transactions. These are really small transactions. Any large transaction, this is the whole point of the Lightning Network, either you wait until the end lock expires, at which point you'll get the funds back and through a transaction to the Bitcoin network, or you can close the channel. And you don't have to worry about things like the dust limit because the transaction is large enough that the Bitcoin network will put it in a block. So if it's really only small amounts of money that people can lose, is this something that money transmission licensing should concern itself with? Like, if we're really only talking about fractions of a penny, is that the kind of custodial risk that should trigger this requirement to post a potentially $1 million bond for consumer protection purposes? I think no. And that's why we worked with the Uniform Law Commission to tighten up the definition of money transmission. And the Uniform Law Commission's Model Act, which again is not law yet, but I think the best statement of what the law and policy should be in this space. That model law says if you're doing transactions that might otherwise fit the definition of money transmission with virtual currency, and they're smaller than $5,000 per, I think it's per month, then you're not required to get a license. You're simply excluded. It's a sort of de minimis exemption. So again, that Model Act is not law, and different states have different opinions that somewhat surround that Model Act's policy. Some are more strict, some are less strict. But as a policy matter, it makes no sense to have Lightning nodes licensed for consumer protection purposes by the states. And I don't think any states currently, I haven't talked to every state regulator recently, but I don't think any states currently are all that concerned about getting those people licensed. And I don't think in the long run, they'll see it as a good policy choice to require licenses. Now, that's just the state licensing issue. As I said, there's also federal anti-money laundering law, and that's a whole nother conversation.
Mm-hmm. Okay, so tell me.
Go on.
Yeah.
So, right. So we've got 53 states and territories that license money transmitters for consumer protection purposes. I don't think, as a policy matter, they should be licensing Lightning nodes, and I don't think any of them are or will necessarily try. Then you've got the federal anti-money laundering laws in the Bank Secrecy Act and its implementing regulations, which are in 31 CFR 1010-100, if anyone wants to look at the definitions. And those are enforced by FinCEN, which is a branch within mainline Treasury Department in the federal government. So completely different regulator, federal, not states, in Treasury, completely different laws, not state money transmission laws, the Bank Secrecy Act, which was passed by Congress back in the 1970s, and the implementing regulations, which have been updated several times, including by the Patriot Act in the 2000s, early 2000s. So what does this other regime look like with respect to who needs to register with FinCEN, know all their customers, file suspicious activity reports? These are the kinds of compliance obligations you have to do if you fit their definition of money services business. And these are the kinds of compliance obligations that it's hard to imagine a Lightning node being able to do. The Lightning Network passes around these signed Bitcoin transaction messages and holds them and then settles them to the blockchain when you close a channel. Nowhere in that scheme is, hi, my name's Peter Van Valkenburg, your name is Peter McCormick, I'd like to open a channel with you, here's my home address, here's your home address, let's know each other so that we can know if you're a criminal or not. You could not, I'm going to say this point blank, I think, comply with the BSA as a Lightning node. Now the question is, should you have to? And that's a really complicated question. So the definition of who has to comply with the BSA is you're a financial institution. And in the BSA, there's a whole list of financial institutions. It used to just be banks and a couple of very similar businesses. But it's been expanded because the BSA also allows the regulator, the Department of Treasury, the Secretary of Treasury, to add to the list of who is a financial institution. And so since then, we've seen this list expand from just banks and a few adjacent businesses to all sorts of things like precious metal dealers, casinos, and money transmitters. And so there's a definition of money transmitter that's different from the state definitions in the implementing regulations for the BSA. And so that definition is pretty broad. It basically says you're a money transmitter if you accept and transmit from one location to another or from one person to another currency or value that substitutes as currency. And it says if you do that by any means, even through an informal value transfer system, you're a money transmitter. So it's a really broad class of businesses. Now, I think it's really clear that that doesn't cover miners, and that doesn't cover someone who's just operating a normal Bitcoin full node, because you never accept and transmit anything. But there's this hard metaphysical question. If you're a Lightning node, do you accept money and transmit money? Or are you just a functionary that's basically co-signing these Bitcoin transactions, which ultimately get settled by the Bitcoin blockchain, not by you, in which case you're not really accepting and transmitting. So that's a really complicated question in itself. And the larger question here shouldn't be too much in the weeds about like what is the metaphysical nature of a partially signed or assigned Bitcoin transaction message. It should be, is this really the kind of activity that we want to require financial surveillance obligations from? So obviously it makes sense that we have banks sort of surveil their customers. They have to know the names of their customers. They have to know who their customers are paying in order to pay them. And so a rule from the government that says, okay, you already need to know all this information, bank, keep copies and share it with us, the government. It's not as burdensome as it would be in a situation where your business is just validating transaction messages and co-signing transaction messages and keeping a node online 24/7. Now the government says you need to know all the people who you're interacting with on a peer-to-peer network. That's much more onerous, if you will. So there's a policy question there. And then there's a bunch of other adjacent questions. Like, let's say, so let me just first say FinCEN, which is the regulator that enforces these laws. I've spoken to folks there. We have a pretty good working relationship with them because they want to learn about the technology and we want to learn about how they're enforcing their laws. And now I haven't spoken to everyone at FinCEN, of course, and the people I've spoken to, that may just be their personal opinion and not the opinion of the agency, of course. But to my knowledge, no one at FinCEN sees the Lightning Network as a high priority for enforcing anti-money laundering policy. And no one denies, to my knowledge, that there are hard legal questions as to whether a Lightning node would or would not be in those definitions as they currently stand. So this is untested waters. And you'll see people on Twitter saying, oh, it's obviously clear that a Lightning node would be a money services business under federal anti-money laundering laws. And that's just, unless they work for FinCEN, ignore that person if they're really saying that it's obviously clear or it's certain, because it's simply not. And frankly, a lot of those people, I think, are working on rival technologies and see a way to rent seek from the government by sicking the government on their competition, which is really kind of childish if you think about it. It's like two kids that are supposed to share a toy in the sandbox, and then one goes to mommy or daddy and says he's not sharing, and mommy and daddy comes over and takes the toy away from the other kid, even though they might have been doing nothing wrong, and gives it to the kid as a tattletale. It's like, this is not the way that innovation should work, running to the government for relief in an anti-competitive way. Now that I got that off my chest.
Yeah. It's very complicated though, right? It
is very complicated. And this is my issue, is that there's a lot of people on Twitter who might be partisans of scaling on-chain versus the Lightning Network, who think it's not complicated and that the government's just going to come after Lightning nodes, which, that could happen one day. The government could come after Bitcoin full nodes too. It could come after everyone in this space. We're here to try to stop that from happening and educate government about why that would be a bad idea. But it's all really unclear. It's not certain at all. So it's not something you should be leveraging to try and convince people to use your technology versus another. technology should be adopted because the market adopts them, because they're efficient and they're good, not because government privileged one over the other. Anyway, I'm getting off my soapbox and getting back to the actual rules at stake here. So a few things. The beginning of Bitcoin businesses being covered by the federal laws rather than the state laws was the 2013 virtual currency guidance that FinCEN released. And they did it in guidance. They didn't create a new rule that says now the list of financial institutions that need to comply includes Bitcoin exchanges. They said, oh, Bitcoin exchanges actually are already covered by this list because they're doing this money transmission thing. And as I said, that's probably pretty fair, because also under the federal rules, a company like PayPal is a money transmitter. And so if you're basically doing what PayPal does, but holding Bitcoins instead of dollars, it makes sense that you'd comply with the same rules, fit the same definition, be a financial institution, and therefore have to comply with the financial surveillance requirements, the know your customer requirements of the PSA. Now, a lot of people complained back then, you shouldn't have done this through guidance. Sure, they're really similar to a PayPal, but this is still kind of a new category of financial institution. So if you wanted to comply, you should have had a rulemaking, which would have put out a notice. We're thinking of covering these businesses as financial institutions, and would have allowed for comment, which is sort of the only way the rule of law and democracy enter the regulatory process. Because the regulator can say basically anyone's a financial institution. And the only way to sort of check that authority, because surely not everyone needs to spy on their counterparties when they engage in commerce, the only way to check that authority is to have notice and comment rulemaking. But they didn't do that for Bitcoin. Now, Coin Center never challenged the guidance and said, you got to go back and do a rulemaking. You can't do this through guidance, because it's a pretty fair argument that, Coinbase is rather similar to PayPal. But here's the thing. If, and no one's talking about this except people on Twitter who don't actually know what they're talking about more often than not, but if FinCEN said, we want to regulate Lightning nodes as money services businesses and have them know their customers and file suspicious activity reports, could they do it through guidance by saying, our existing regulations cover you already? Or should they do it through a rulemaking? And my answer to that is absolutely, it should be done through a rulemaking. This is a serious diversion from the current list of financial institutions, which usually just includes sort of people in a position of trust who hold other people's money and therefore know their names and know how to find them because they have to pay them. And therefore, it's maybe reasonable to require them to share that information with government to prevent money laundering. This is something completely different. This is a rote, sort of routinized task you perform by keeping a computer online and basically participating in an open source protocol for scaling Bitcoin. So if FinCEN wants to cover this, I don't think they can just do the easy thing and make guidance that says this is already covered. I think they have to do the somewhat harder thing and have a rulemaking that says we're thinking of covering these people as money transmitters, as money services businesses, and requiring BSA compliance for them. And then we would get a chance to comment and explain from Coin Center's perspective, and everyone else in the community would get to comment as well. It's a public process, and say, we don't think this is a good idea because it'll make the technology untenable, and the technology is important for X, Y, and Z purposes because electronic cash matters, because privacy matters, et cetera, et cetera. Now, we could still lose that fight, but it would be probably like a 1 to 2 year process. And it would be reasonable, and there'd be good discussions that need to happen before a bunch of people end up on the wrong side of a highly consequential law where they could end up in jail. So first of all, I think that's what should happen. But then there's a secondary question here. Even if there was notice and comment rulemaking, and in 2 years the rule was finished and money transmitters included, or BSA regulated financial institutions included Lightning nodes, is that okay from a constitutional standpoint? And this is what we recently wrote a lot about in a paper that we released last month about electronic cash and decentralized exchange and constitutional law. Now, in that paper, we don't mention the Lightning Network, and I'm working on another paper that will look at more questions. In that paper, we really just look at any attempt to directly regulate a software developer of any of these protocols, including the Lightning protocol for that matter, and whether that would be constitutional. But we go deep into the Fourth Amendment, and the Fourth Amendment is relevant here for a pretty obvious reason. So the BSA is a bulk electronic surveillance statute. It's kind of like the NSA's PRISM program, where they were collecting tons of information from internet intermediaries, except they're collecting all that information from banks. But just like PRISM, they're doing it without a warrant. Now you might say, okay, so you were just talking about the Fourth Amendment. As I remember, the Fourth Amendment is this requirement that if the government's going to seize or search information that's private to one of its citizens, they need to get a warrant from a judge in order to have permission to do that. And this is important because the judge is in theory a neutral third party who's going to say, no, this is an abuse of your authority as law enforcement, or no, this is fine. That guy's probably a criminal. Go ahead and search their house. And so there's this really interesting question. Why is the Bank Secrecy Act constitutional if it allows regulators and law enforcement to go directly to a bank and collect all your private information without ever going to a judge and getting a warrant?
Next up, I talked to Peter further about how the law applies to the Lightning Network, but before that, I got a message from my show sponsor, BlockFi. And have you checked out their interest account product yet? Have you tried their loans products? I mean, they've got a couple of products there now, and there's more coming. Definitely the future of crypto and banking is being led by them. I really like what they do, and I really like how they operate. And as I said in the intro, I'm going to be signing up for their interest account. I'm going to be doing it in the next couple of days. I'm going to document my experience. I'm going to feedback to you, let you know what I think, and I'm going to be using my Bitcoin, putting my Bitcoin where my mouth is. Also, did you check out my interview with Zach? There are people who've got questions around this interest account. So I got on the phone with him. We've recorded a whole bunch of questions from listeners relating to things like rehypothecation and insurance. So if you want to check that out, that is on my SoundCloud. Head over to soundcloud.com/what-bitcoin-did. But if you do want to check out BlockFi, if you want to check out their interest accounts or their savings products, head over to blockfi.com, which is BLOCKFI.com. That is blockfi.com, BLOCKFI.com. Isn't this the issue that came up with Ross Ulbricht?
I'm not familiar with exactly how this issue would have come up with Ross Ulbricht. It might be. I haven't followed that. Is he making constitutional arguments?
Well, they did. I think it was on the Fourth and the Sixth Amendment, but there was information collected on behalf of, I think it's his internet usage or his internet IP records, but without the approval of a judge.
Yeah, well, I mean, that's exactly the kind of warrantless search that there's been a lot of discussion about, not just in the Bitcoin world and in the Bank Secrecy Act world, but also just in the world of online consumer services. Like, can a law enforcement agent just write their own subpoena and go to Google and get all of your Gmails, including the content of the Gmail, not the email that you're sending, and learn everything about you without ever going through a judge? Maybe is the unfortunate answer to that question. And that's why there's a lot of fight about whether the warrant requirement from the Fourth Amendment should apply to electronic data. And so the question here with the BSA is, okay, why is the BSA constitutional? Why can regulator or law enforcement go to a bank and get all your bank records without a warrant to search your private stuff? And the answer, which came around in the 1970s when the Bank Secrecy Act was new, is something that was named the third party doctrine. And the third party doctrine, which is an interpretation of constitutional law of the Fourth Amendment, says if you hand your information over to a third party, like I hand my emails over to Google when I use Gmail, I hand my transactions over to Bank of America when I use them as a checking account. If you hand your information over to a third party, you lose your reasonable expectation of privacy over that information. And therefore, you can no longer challenge a search of that information because basically a warrant isn't required because it's not reasonable for you to expect them to keep that secret anymore. And so there's a little nuance to this in the Bank Secrecy Act cases that are important. The courts back then said the reason why this is the case is because people voluntarily hand their information over to a bank when they're writing checks. And the bank has a reasonable, legitimate business purpose for collecting that information, because when they collect the checks, they need to see whose account they're debiting from and who they're crediting, somebody else in the world that their customers ask them to pay. And so they already have this information, and they have a legitimate purpose for collecting this information as a business. And if this information is voluntarily provided to them by their customer, then it's reasonable for government to get that information from the bank without a warrant. So that's the constitutional law here. Now, what's interesting is, okay, take that and apply that to something like a Lightning Network node. If there was a law that says Lightning Network nodes need to collect customer information and file suspicious activity reports to us if somebody's making a transaction through the Lightning Network that's suspicious, and they need to know all their customers, this is very different than in the banking context. That information would not be voluntarily provided to the Lightning node. Right now, no one's providing that information to Lightning nodes. And if it was required, and this is a little crazy because how would it even work, but stick with me. If it was required from the government, then it's not being voluntarily provided by the users of the Lightning Network. It's being required by government. And so maybe you need a search warrant then, because it's not being voluntarily provided anyway. And then the other question, aside from voluntarily provided information, was, does the business that is doing the financial surveillance on the behest of the government have a legitimate business purpose for collecting this information? So banks need to know the names on the checks that they're paying and honoring. Telephone companies need to know the phone numbers that people are dialing. A Lightning node does not need to know anything personal about the people who use the Lightning Network. All they need to do is check an elliptical curve digital signature on a transaction message and keep doing that until the channel's exhausted, and then send a message to the Bitcoin network. At no point do they have any legitimate business purpose to collect that information. So requiring them to search and seize their users or their counterparties is probably unconstitutional, I think. And I think it would require a warrant. And you can't run a bulk surveillance regime with warrants, because warrants have to be specific. So you couldn't say, well, we've just got a warrant from a judge that allows us to collect information from every node, because that's a general warrant. And this is actually the kind of thing that the British did, which triggered the American Revolution, along with other issues, some of them having to do with tea. They said, like, here's a warrant from a judge that we can search every home in Boston. And this was, this is totalitarianism. This is a surveillance state. We can't have this. And that's why it was written into our Constitution that warrants need to be specific. And you need judicial scrutiny for every specific request to search somebody. So I don't think it's constitutional. So we went through first the state stuff and then the FinCEN stuff. And there's lots of reasons why, aside from the US Constitution, I don't think Lightning nodes should be or will be regulated. But then there's also this sort of trump card, which is what the Constitution is. And I don't think it's constitutional. If any regulator wanted to regulate a node for financial surveillance purposes, for spying on the users of the network, I think that violates the Fourth Amendment. And I think that's pretty clear. And you'll have to sort of trust me on my case law here, but there's a whole paper that we just wrote explaining all this case law. It's on our website. It's called Electronic Cash, Decentralized Exchange and the Constitution. We published it last month. And the courts are also trending in this direction. So there's a case from last year called Carpenter, where government wanted to go to,
I remember it.
Yeah, government wanted to go to cell phone service providers and collect location data for their customers, because your phone is constantly, querying all of these cell phone towers, and you can easily triangulate the location of your user if you're a cell phone provider. And that data is really valuable to law enforcement. And the Supreme Court said, actually, in order to get that data from those cell phone providers, law enforcement needs a warrant. Why? Because that information wasn't voluntarily provided by the user for a legitimate business purpose. So it's this exact same standard from the Bank Secrecy Act cases. They're basically saying, and this should be a harder case than the Lightning Network, because frankly, you do voluntarily provide your location when you phone the cell phone tower. You don't know you're doing it, so maybe that's why it's not voluntary. Like, non-technical people don't know that they're revealing their location whenever they use a cell phone.
The Carpenter case was the one that was raised in relation to the Ross Ulbricht case.
Oh, was it really?
That's why I'm aware of it. Yeah, that's why I was aware of it.
That makes total sense because they probably potentially found him by triangulating his location with cell phone data or through other means, which are similarly sort of suspicious from a constitutionality standpoint. Like maybe you should have had a warrant in order to collect this information about Ross. Maybe you shouldn't have just been able to write your own subpoena as someone in law enforcement with basically unchecked investigatory powers. And so just the one other thing that they mentioned in the Carpenter case is really interesting. They say, does a cell phone provider have a legitimate business purpose to collect all this location data about their users? And they said no, which is funny because really they do. Like a cell phone provider has way more legitimate business purpose knowing the location of its users so it could provide better service than a Lightning Network node would have knowing the location or the names of its users. There'd be no purpose for a Lightning node to know all that extra information. It wouldn't make their business better, but it would make the cell phone provider's service better to know where their customers are. But the court said, yeah, but that's not core to your business purpose. The core of your business purpose is just providing, communication services. It's not knowing where your customers are. So the fact that you collected that information means it's this kind of special information that even though you have it and the customer doesn't have it anymore, the customer still has a reasonable expectation of privacy over that extra information. So if law enforcement comes to you and asks for your customers' locations, you say, no, I can't give you that information unless you come to me with a warrant from a judge. And so that's the law with respect to cell phone location data. And I can't imagine how you couldn't apply the same standard to the Lightning Network if it ever came to that and say, I'm sorry, you can't just treat Lightning nodes as BSA regulated parties because you need a warrant every time you get this extra information about their customers that you're trying to get by treating them as a BSA regulated entity.
Right. So the other side of this, even if they wanted to enforce this on node operators, it's practically almost impossible.
I would say like impose, because enforce suggests that they already have the legal authority to do it. And as I said, I think they should have a notice and comment rulemaking to give themselves that authority so that there's a transparent process rather than just start enforcing as if they already have the authority.
But even to impose,
right,
the practicality of that is close to impossible, I would have thought.
So, I mean, you could make it a crime to run a node in the country unless you are collecting this extra information. And there's very handy maps right now where you can see the relatively accurate location of Lightning nodes all over the US. And, there's a giant one in Herndon. I guess it's probably an Amazon data center, or maybe I know some people who live out in Herndon who it might be as well. I don't know, but you could make it a crime, and then you could send people literally to knock on doors, hopefully not with like assault rifles, but I guess we could imagine this dystopian future, and say you're doing something that's illegal unless you're collecting customer information, at which point the node operator is going to say, I can't do that. That's not how the Lightning Network works, at which point they're going to say, okay, well, then you're violating the law. And so that's a nightmare scenario. Now, I think that scenario is unconstitutional because I think it is unconstitutional in the US to make those requirements of people who are just running software that checks transactions on the Lightning Network and opens and closes channels. But it could happen. Would people still run nodes and maybe use Tor to mask their location more effectively? And I know the Lightning Network already has a Tor-like system for making it harder to find intermediary nodes that don't publicly broadcast their location. Could all the Lightning Network nodes just end up being outside of the country and therefore even harder for the US to get a hold of? Although they'd have jurisdiction potentially if there were US persons using the Lightning Network through those nodes. Yeah, and at the end of the day, this is a sort of like cypherpunk ultimate battle. This is like one of the final bosses on the way to some sort of anarchic paradise that people who build these networks might imagine. And, I have a lot of sympathy with those anarchic visions, and I have a lot of concerns over that final battle. I'm not saying I think government's going to disappear. I'm not saying government's going to win. I'm saying we shouldn't even get to that point. Like, government is people. Regulators are people. As I said, we've spoken to people at FinCEN, at other agencies about this stuff. They don't want to ruin people's lives, and they don't want to destroy the progress of science and technology, which by the way, includes scaling decentralized peer-to-peer electronic cash, in an effective way. So I don't think we get to that end game, but yeah, you're right. That end game is ugly because it's basically fuck you, your laws don't apply. Come and get me, copper. I'm going to use all my techniques of onion routing and encryption and whatever to stop you. We don't want that. We don't want that battle.
No, and to be honest, I think it would be something. Well, there's two things there. It will really just, again, push the innovation and opportunity outside of the US. And secondly, it would most likely be solved through some kind of next phase of development where the developers will focus on creating anonymity around nodes and products. So there's just no benefit to heading down that kind of route.
Absolutely. Yeah. I mean, it's actually like pretty impressive, the amount of work being done in the Lightning Network here in the US. It's like one of the coolest new inventions since Bitcoin. And a lot of the developers are all here in the US, maybe contrasted with things like Ethereum, which seem to have sort of generally moved over to Europe, partially because of the securities laws implications if you're here in the US, and partially for other reasons. It'd be a real shame if we lost all of these brilliant technical people who are building awesome payment channels from the US economy, especially at a time where we're really concerned about job growth and the health of the economy anyway. It's hard to make that argument because unfortunately a lot of people who are really concerned about jobs and innovation and the health of the economy still think of this technology as some kind of a joke. See my testimony in front of the Senate Banking Committee where I was up against Nouriel Roubini. But it's an important argument. And I think it's one that's starting to really gain some traction. Like there's the blockchain caucus in the House of Representatives, who is a group of some 20 or so members of the House who really actually care deeply about this technology. There's some great work that's been done on legislation already. In fact, Representative Tom Emmer in the House has introduced a bill that would create a safe harbor for non-custodial entities, where it would say no state law or federal law can require licensing from people who are not holding other people's virtual currency. So, you can require a license from a Coinbase because they're holding people's virtual currency, but you can't require a license or registration with FinCEN, for example, from a node on the Lightning Network or a Bitcoin miner or a full node on the Bitcoin network. So that's active legislation. That's a bill in Congress right now. Now, is it likely to pass? No, it's still early days. We've got to get more of Congress on board with this kind of thing and get them excited about it. But it's actually happening a lot quicker than I imagined it would happen. Like there's people who get this as a jobs issue. They get that this is a competitive issue with the international economies and technologies, and they're starting to actually, I think, fall in love with the technology. A few of them think it's just still garbage, but this is politics. It's fun or terrible.
How long do you think there will be until there's regulatory clarity around this?
Yeah, it's going to be a little while. As I said, this is not right now, I believe, a priority for FinCEN. Like they've still got centralized exchanges out there that aren't doing any of their compliance. They recently went after BTCE and got Alexander Vinnik when he was in Greece. But there are other exchanges just like BTCE that they want to go after. And I think they have good reason to go after them. They're centralized exchanges that hold people's money, have personal relationships with people because they need to know who to pay at the end of the day, and therefore have good reason to collect information about their customers and report that information to regulators who are trying to stop money laundering. I think other priorities for FinCEN are things probably like the ICO boom. I think a lot of people might have been laundering money through ICO sales. I've heard this. I don't know if this is true. So that's probably another priority for them that I think would probably come before the Lightning Network. And we mentioned Bittrex earlier. So the Department of Financial Services in New York said basically, we think there have been anti-money laundering violations when they rejected their application. So I hope they're wrong because I don't like folks who seem to be trying to do the right thing, like apply for a bit license, ending up on the wrong side of a legal fight. But if that's true, the New York Department of Financial Services just potentially sicked FinCEN on Bittrex, which will be interesting to watch. I have no idea what's going to happen there. And so there are all these priorities that FinCEN has that are sort of lower hanging fruit than this complicated question of the Lightning Network. So I don't think they're coming to it anytime soon. And that means we have uncertainty for longer, but it also means I don't think a Lightning node is in immediate danger of being found to be a money services business and in violation of US laws, which carry strict penalties. I could be wrong about that. Don't rely on that statement. If you run a Lightning node, there's this big gray area and you're taking that risk. But frankly, I think I'd be doing it for the right reasons because, freedom and the Fourth Amendment, and et cetera.
But there are some custodial wallets now for Lightning. There are a few of them out there now. And I guess they really need to consider what they're doing.
Any custodial wallet is pretty firmly within the already accepted interpretation of who needs to, comply with the Bank Secrecy Act. If you're really running a customer-facing business with like a rich, useful app, and you're holding people's money, you probably are a money services business under the federal laws, and you probably need to get a license under the state laws. So, yeah, be on notice.
So that's quite serious then.
I guess I don't know. I mean, are there a lot of? I don't know if there are a lot of these custodial wallet providers who are not already considering their regulatory obligations. If that's true, then that's quite serious. From a technological standpoint, I don't see that as serious. Because, if you're running a customer-facing business, you are able to comply with these laws. It's technologically serious if somebody tries to say just a regular intermediary node on the Lightning Network, or for that matter, a Bitcoin miner on the Bitcoin network, or a full node operator. If someone says they are a money transmitter, they are a money services business and need to file suspicious activity reports and know their customers, then it's really serious from a technological standpoint, because you can't do that role in that technological system and comply. And I don't think you should have to, because I think that would be an abusive interpretation of the regulations on the part of the overzealous regulator, and also an unconstitutional interpretation.
Okay, so a lot to think about, but it seems like Coin Center are on top of things, typically fighting for the industry. Actually, that was something Angela brought
We don't fight for the industry, though.
Well, so Angela said that you guys explain that you're impartial, but she said you're not really, because you are advocating.
No, we're advocates.
Yeah, you're advocates.
Yeah.
But you're not. You can't be an impartial advocate, right?
No, we're a very partial advocate, but we're partial to something very specific. We do not represent the industry or the industry's interests. We take donations from the quote-unquote industry, like from companies like Kraken, for example, which gave us a really generous donation last year. But we don't represent Kraken. If Kraken ended up on the wrong side of the laws in a way that we didn't think we should defend them from a policy perspective, that's not our business. On the other hand, what we do advocate for, if we don't advocate for these companies and this industry, is for open source technology, is for basically the network as a whole. And this might sound strange to people who didn't acculturate themselves in the internet from a young age, but there are a lot of other advocacy organizations. They're kind of like civil liberties organizations that advocate for the freedom to use technology and the freedom for technology to grow with as little impediment as possible from inappropriate application of regulations. And so hopefully a lot of your listeners know about the Electronic Frontier Foundation, which we've partnered with on things like this constitutional law paper. They read some early drafts that I wrote. They've been around since the 90s, fighting regulations or laws that would make it impossible to run a server on the internet, because that used to be a battle, and to some extent it's still a battle to this day. And the EFF doesn't represent Google or Apple or Amazon. They might take some donations from them, and they might often represent ideas or advocate for legal changes that would benefit Google, Apple, and Amazon. But at the end of the day, the EFF is advocating on behalf of the internet as a peer-to-peer open source infrastructure that's just going to make the world better. And hell, if Facebook or Google end up screwing up that peer-to-peer infrastructure, then the EFF would probably fight against them. Because that is a possible scenario now that we have all these walled gardens that are trying to break up and destroy what was originally a nice peer-to-peer internet. I'm not saying that, Google and Apple and Amazon or whoever have turned evil, but, this is an open question these days. And so the same is true of Coin Center. We want to defend people's rights to develop open source software that build networks for value transfer, networks for blockchains, and for obviating the need to trust people in order to keep records of important data. Like, that's what excites us. That's what we think is going to make the world better. And so we are very partial to certain positions. We believe that these things will ultimately be a benefit to human flourishing and human dignity. And so if government wants to try and come and hurt these things, we're going to fight them. We're very partial. But at the same time, just like EFF might kind of look askance at, big internet companies stepping into what was previously a peer-to-peer network, we would be concerned if a cartel of, say, exchanges, and this is not happening, but if it did happen, tried to sort of like replace Bitcoin with a centralized system. That would also be something we'd advocate against. So Angela's right. We're advocates and we're partial, but it's a very specific thing, and it's definitely not advocating for quote unquote industry. It's advocating for freedom and human dignity and the right to use open source software.
Amazing. Well, as ever, thank you. This has been awesome. But I didn't think we'd get to an hour of material, but we have. So thank you so much again, Peter. So let people know how they can keep an eye on the work that you're doing and stay in touch with you. Oh,
right. Sure. So Coin Center is a public nonprofit. So all of our advocacy materials are available online at coincenter.org. And we also very much welcome any donations from the community, because that's how nonprofits continue to do the work that they do. Thanks for having me.
All right. Take care, and I'll see you in New York.
Yes, definitely.
Okay, so what did you make of that? Did you enjoy that interview with Peter? I really, really do enjoy talking to Peter. That's the second time I've interviewed him. If you want to check out the other interview, that's on my website. I will have that in the show notes as well. But I thought that was super interesting, actually. A whole bunch of things I hadn't thought about. But I do think it's ludicrous that node operators may have to consider having a money transmission license. And hopefully the Coin Center work will avoid that. Also, it's completely impractical, and also impractical for implementing KYC AML requirements. So yeah, that was really interesting, I thought. I also thought his perspective on custodial wallets was interesting, and how the law might apply to them and how they may require money transmission license. So yeah, if you're operating a custodial wallet, that might be something you have to think about. But yeah, Peter's great. I really enjoyed the interview. It was great to catch up with him, and hopefully I'm going to get him on sometime soon with Angela Walsh to have a bit of a debate about some specific things relating to the industry. So anyway, if you enjoyed the interview, you want to feedback to me, you can. You know my email address. It's hello@whatbitcoindid.com. And if you want to support the show, I'm going to rattle through this because I'm super busy. I've got so many interviews coming up, but there's just a whole bunch of stuff you can do. You can find it all on my website at whatbitcoindid.com by clicking on the sports section, but very quickly, just listen to the sponsors. They help me do this. Also, if you don't want to listen to the sponsors, become a patron. That's at patreon.com/whatbitcoindid. If you don't want to be a patron, you can subscribe with crypto. Just drop me an email. I'll give you a deposit address and add you to the distribution list. You can become a show sponsor. Just reach out to me. It's hello@whatbitcoindid.com. I'm doing over 200,000 downloads a month, so if you want to reach people, there's a big opportunity to do that on the podcast. You can leave me a review on iTunes. You can click on the subscribe button. You can follow me on social media. You can check out my website, sign up to my newsletter, and you can share the show out with your friends and family. Thank you for putting up with this every week, because it really does help with the show. Okay, so a bunch of more interviews coming up this week and next week. I've got a follow-up interview with Christian Decker, going a bit more of a deep dive into the technical stuff following my first interview with him. I've got a couple of critical interviews coming up with Dan Robinson and Peter Risen. Oh God, I've got no idea how that's going to turn out, but I expect it's going to be scrutinized heavily. And remember, if you do want to reach out to me, feel free to email me. My email address is hello@whatbitcoindid.com.